Wealth Builders is out once again. Your private money educator, private money syndicator, and savior Nick Billions here, bringing you another personal development drive-by educational video brought to you by the Mills Funding Group LLC, an apartment acquisition and asset management company. And today we're talking about wealth domination for the Donald Trumpers. Alright, always as a disclaimer, this information is purely educational and is not going to present or market any securities opportunities, and it's nothing dealing with any investment strategies, more dealing with character building and wealth building and shaping your mind. So everything else is okay with this. Now, Donald Trumping. Here are 4 successful pillars of successful negotiation. 1, power is the ability to convince people to accept your ideas. 2, negotiation is a form of convincing. 3, power is ability. Okay, and ability comes from knowledge, and ability is the result of practice and application. So it's more than just knowledge, but it's actually the practice of doing what you've learned. And the more you learn to do that, the better of a negotiator you become. Get someone else to pay for your debt, and you do that through real estate, franchising your product, or licensing your product. Donald Trumping with your corporation. Here are what the good entities are. You got an S Corp, a C Corp, an LLC, and a limited partnership. And with each of these entities, you always want to have at least the minimum paperwork of the articles of corporation, the organization, articles of organization, and a certificate of limited partnership. Just letting everyone know who the partners are, what their stake is, and what everybody's roles are. Build business credit is very important. Build business credit, and just like using other people's money, you want to learn to use other people's credit and not use yours. Get yourself further away from the business. And one way that you do, you liquidate business credit cards. You go to and here's one thing that we did. You liquidate your business credit cards. You go to your local bank with that money, and you negotiate for a 3-to-1 master loan commitment, or in layman's terms, a line of credit. And then once you get that 3-to-1, like if you bring them $100,000, they'll give you $300,000 to use. You use that $300,000 to buy property and cash flowing investments. You pay off your debt. You pay off your debt with the business credit cards. You pay off your debt with the line of credit. At the same time, enjoy remaining cash flow, and you avoid taxation because it's all borrowed money. I know it sounded like a lie, but trust me, this is one of the most surefire ways that the top 1% do to acquire wealth when they can't find it anywhere else. Lower your profits towards the end of the tax year to avoid double taxation, and that involves getting new investments. You can gift your profits through trusts. If you look through our asset protection series, you can see more on how to do that. You can use offshore accounts, and you can use what's called entity income spreading, which we also discuss in detail in our asset protection video series. You want to use an LLC as a general partner of a limited partnership, which isolates any personal liability for the ultimate leverage. Trumping with real estate. You want to sell houses with a charitable remainder trust, which makes the whole process tax-free. You want to separate each entity with each property with a separate entity, a separate LLC. You want to choose every property as if you're going to resell, which means you have to plan it before you even do the first step of even inquiring about it. You have to plan the entire process before you even start it. You want to refinance properties to purchase other properties, to cash out investors and increase your cash flow, and to make improvements to instantly increase the equity for the property and the value so that you can resell. When you're looking at properties, you want to determine the project. What type of project is it? What is it? Is it residential, commercial? Is it an A, B, or C market? You know, the marketability of it. The partners. You can never do a good deal with bad partners. And please don't make the mistake of trying to learn it yourself. Just take the advice of the people who've already been through it. You cannot do a good deal with bad partners. Financing. What are the terms? What's the interest rate? Are you able to refinance? Is it fixed? You know, things of that nature. And management. This is probably the #1 indicator as to why a A-class property can, in a matter of short years, become a B, or even worse, a C-class property without any maximum equity to show for it, with the exception of it being aged. I've seen properties go down from sugar to nothing just because of bad management. Management overtakes their take on what they expect to be paid, and they undervalue and underperform on their agreement. That's why it's very important, very, very important to hire the best management. And we have a management section through our real estate series on how to choose the best property management team for that. You want to debrief every situation. What happened? What worked? What didn't work? What was learned? And what can be done to correct or get leverage. That's how you become the ultimate trumper. Personal development, drive-by education at its best. Again, I'm your real estate educator, Nick Billions. And for more of what we do and what we offer, you want to go to our homepage at privatemoney.vaniquecompanies.com, our Facebook page at facebook.com/privatemoneysavior, and subscribe, comment, and like our videos at our YouTube channel at youtube.com/Mills Funding Group. And I appreciate your time and attention to this, and I look forward to educating you on our next video.